the case of the digitization of commerce, or let me say the digitization of the economy, revolves around convenience, mostly. If you notice, most of the transactions, the e-commerce transactions, are happening on mobile phones. Ugandans now have a lot of access to mobile phones as compared to other services. The penetration of mobile phones is very, very big. The statistics can tell this to us. For example, if you look at mobile money, over 50.6% of Ugandans have access to mobile money services. This is in comparison with 11% who have access to commercial banking. When you look at the convenience that e-commerce is bringing, it cuts out a lot of costs, like having to move from home to go to town to purchase things. You can buy things from the convenience of your home, from your mobile phone. So the biggest factor that the digitization of the economy that e-commerce is bringing on board is convenience. That convenience in access to service, be it banking services, be it insurance services, be it investment in money markets, be it getting a ride to a place we have the Ubers, be it ordering for food. The convenience is the biggest selling point. If we talk about financial services, definitely the banks, the traditional, who we call the incumbents, have been affected by the emergence of online payment platforms, digital payment platforms like mobile money and others. The specific impact they have done to them is that they have cut into their margins. Right now, the margins of the commercial banks have been cut into by these people who are offering retail services, retail banking services, like extending credit. Right now we have, you can get a loan, a quick loan on your mobile phone. We have fintechs that are doing that. Yes, COVID had a very, very big boost to the digital economy. It had a very, very big boost due to the lockdown, in that people are not allowed to move freely. So we had to find ways of how do we access our needs amidst the lockdown. But that notwithstanding, the preeminence of the internet and also the products that have come off the internet has promoted the digital economy. Right now, the penetration of the internet is greater than it was. Statistics show that in every 10 Ugandans, there are 7 SIM cards registered for every 10 Ugandans. So Ugandans have phones. And now I am telling you that with your phone, you can be able to access a plethora of services. Right now, the coverage of networks, if you look at 2G networks, almost everywhere in Uganda. If you look at broadband networks like 3G and 4G, almost 80% of Uganda is covered by those networks. So meaning the internet, the proliferation of internet all over the country is enabling, it's an enabler of the digital economy. So yes, the lockdown helped more people understand it, but largely the internet coming in and other technologies are the ones that are powering the digital economy. The dangers are imminent, and one can come from cyber attacks. Because this industry is regulated right now as I speak, but I cannot say it's thoroughly regulated. The regulation is still in its nascent stages, but it is regulated. So it has suffered a lot from cyber attacks, because even the regulatory authorities are still finding their way around how to regulate data security and how to ensure quality standards. You know, the challenge is that if you, for example, talk about the financial sector, we have legacy systems that have been traditional, that have been around, of regulation. But now you're dealing with an industry that keeps on evolving at a very fast rate. In the technology space, there are changes that keep coming very rapidly, and you need to, the regulators are struggling to be at par with them. So there is that very, very imminent risk of cyber attacks. Yes, it falls back to regulation. It falls back to regulation. I'll first give a traditional example, then I go to the digital. Traditionally, one way we protect from fraud is, first of all, reducing access to cash. If you notice, in a lot of government parastatals and regulatory authorities, they eliminated cash. You're not going to go to URA and you transact with cash. So now all payments have to be channeled through the banking system. So that helps reduce fraud to that extent, where you limit access to cash. Now, in the digital space, how we are able to work out fraud, it comes back to regulation. The people who are offering the services, the digital services, the platforms, the payment services, have they taken due care to ensure that, number one, their systems are proof from cyber attack? They're not going to get 100% protection, but are they progressively working on their security? Have they handled access levels? Who within an organization is able to access different levels of security clearance? So when we have an industry that has a lot of fintechs coming up that are unregulated, it opens up the consumer to fraud. And that is why the government came up to regulate fintechs. And for example, right now you have to register with the Data Protection Office, that is the Personal Data Protection Office, that is supposed to ensure that people's information, personal data, is protected. You're not supposed to give out someone's data without their authorization. Right now, if you're a fintech or you are a bank, a mobile money provider, you need to register with the Financial Intelligence Authority, which now works on money laundering, to ensure that criminal activity does not get a passage of their monies through these fintechs. There is a hole behind, more than a room, there is a hole for improvement. It is, we are not yet sufficiently regulated. The steps are there, steps have been taken, but it's not sufficient. And this problem is not only in Uganda, it is global. It is global. The way financial regulation has been working, it is, we say, legacy systems, which are known, which are old. They work with predictability. You know that this is how the processing of a check works. There are different criteria. There is no innovation that is going to happen tomorrow. Now, when it comes to data security, which is the biggest threat, the cyber attacks, innovations are coming up every day. And when you come up with regulations that are specific to a technology, then when that technology is surpassed, when a new technology comes in, that means that the previous regulation no longer stands. Our regulatory framework should be more of principle-based as opposed to technology-based, where you say, for example, right now we are attacking mobile money. We want to make sure mobile money is secure. It should go beyond just looking at a technology. It should go to principles. Principles, for example, like consumer protection. How do we regulate consumer protection to make sure that the end user is protected? Issues like knowing your client, what we call KYCs. How do we enforce KYCs within the financial infrastructure? That is to enable avoidance of money laundering. Yes? How do we work on risk management? So we need to figure out how to pass on these principles in the fintech space. Definitely, if you are in the digital space, if you're in the cyber space, and you're not operating the traditional shop, there is an issue of traceability. Currently, URA is facing that problem not only with the digital economy. It is facing that problem with hawkers. It's facing that problem with border borders. It's facing that problem with Uber drivers. There is a problem of traceability generally in the current taxation regime, more so when you come to the informal sector. Informal sector that is not registered, they don't have a TIN. So it's not a problem that is just coming with the digital space. Traceability is a very big problem in taxation. That is why many Many commentators have complained about the tunnel vision of taxing the few who are traceable, you and I, and we are bearing all the tax burden. What the government needs to do is to come up with incentives that can promote formalization of businesses, so that even though I'm operating on e-commerce, whether I have a shop, I move towards formalization of business. There is a cold fact in the statement, adapt or die. We need to adapt. The tech space, digital economy, e-commerce has come, and we need to adapt lest we die. We have seen commercial banks, the incumbents in the financial sector, adapting. Right now they are all having online banking. They have partnered with fintechs to offer specialized products to the end user. We have seen commercial banks partnering with mobile network operators, with MTN. MTN has partnered with NCBA. It partnered with NCBA to give out microcredit. We have to adapt. How do we adapt? Not every business is going to have the capacity of coming up with its own online platform, but you can leverage on existing open platforms. For example, did you know that you could sell your products on Amazon? You can register, get an Amazon account as a merchant, and sell your products. Now you get even global exposure. You can get people calling you from Kenya to buy your products. Do you know you can partner with local players like Jumia to sell your products? Because the products Jumia is selling are not products that have been brought by Jumia per se, no. These are products for third parties. We now need to find ourselves in whichever business you're in. How do I tap into the digital economy? Because right now it's the digital economy that is reigning. We are going cashless. How do you position your business to be able to receive cashless payments?